All right, everyone, let's begin here. We have Vitaly, Wendy, Robert, Paul, Keith, Jatinder, Ed, Mallory, Gerard, all right, Byron. Let me know if everyone can hear me. You should see a chat box there, and you can go ahead and type in your chat box right here. All right, Keith, thank you. All right, this is a live presentation. It's not a pre-recorded presentation. Thank you, Ed. We're going to, hey, Jatinder. All good, thank you. So what I'd like to do today is cover what's happening in the markets, show you some of the software. Some of you may be interested in the software that we offer here at DayTradeToWin, and really take a look at the goals that we have as traders. If you're interested in learning to trade, if you're an experienced trader, I invite the hard questions as well. And so what I'd like to do is start off with offering a free member account. This is something new we've just implemented as well, where you can go ahead and let me just bring up my my window here. So what we have here is an opt-in box where you can create your own member account, and we have some free things available. We have a free course. You can download some software. If you're new to trading and you need to get a charting platform, we can help you get live data. So this here is a great way for you to get a member account. It's free. You don't need a credit card or anything. You just go ahead and create a member account, and then there's a lot of things there for you to watch, learn, and really take advantage of the free news indicator we have as a trial. So all these things we try to get people to get involved with, understanding first how trading works before really jumping in. If you're really interested, this is a great first start. Now, my name is John Paul. I'm the founder of DayTradeToWin. I've been doing this for over 12 years, and I've met a lot of interesting people. We've done seminars. We've been around the world. We had one in Miami not too long ago. And so really the idea is, when I talk to traders and I think about what their goals are, most traders think that they are interested in just making pure profit. And that's really the goal, right? We're all here to make some money and to make profit. But there's another part of trading that a lot of people don't think about. It's the freedom. It's trying to trade a few hours a day and being done for the day, let's say, not being tied, being your own boss. All those things come into trading. But there's also, more importantly, a part of trading that we don't often think about, and that's also the risk, right? So part of trading also involves risk. So please read and understand there are risks involved with trading. So we do have a risk disclosure here that I'm going to put up. If you have any questions on this, feel free to email me. But please understand there are risks involved with trading. This is something that a lot of traders should be aware of. So please visit daytradetowin.com/risk and understand the risks involved with trading. So I wanted to get that out of the way before we begin. Now, when it comes to looking at software and looking at the type of trading that we all want to do, we have to remember that it's not as easy as everybody claims it to be. It's not just buying and then waiting to make profit and making money. So we have to be on top of this. Trading robots as well, I think they're a bad idea, because a trading robot, regardless of what can happen, is out of your control. And that's not something that I want anybody to be without being in control of protecting their account. So I would stay away from automated and trading robots, because I think there's more risk involved with that. What I really want to do instead is understand and teach price action, which is much more than just candlestick interpretation. It's really understanding the type of market that we're in, what we're going to do as buyers and sellers, and more importantly, understand why we're doing it. So it's not just following software. I really do teach what you're doing so you have an understanding before you enter into the market why we're doing what we're doing. It's not just following software. And so the courses and the programs that we offer at DayTradeToWin really do provide not just software, but also a course or an education of the background, how this is created, what is the background of why we're buying or why we're selling, and that's what I want to show you. Now, what we have here currently on the chart is the Atlas line. The Atlas line software is very popular. There's a lot of traders using it, and I'm going to explain to you exactly how this works to start us off here. And now, again, if you have any questions, you can go ahead and type them in the chat box. I'll be looking at it. We have a lot of people in the room, but I'll try to get to as many questions as you have if you see here in the chat box that I'm going to be just constantly looking at to answer your questions. The other thing is we have some new things actually happening here at DayTradeToWin. The first is the mentorship program. It has evolved, and a lot of people have taken advantage of learning on their own the trading methods that we offer. So we've kind of changed a little bit on the way that we approach this program, where we're offering an accelerated version of the mentorship program, but really it's learning on your own. It's something that a lot of people have asked me to do over the years, and if you haven't already done so, you can visit the let me just bring it up here, the DayTradeToWin mentorship page. And some of you already, and I see a lot of familiar faces and names here in the room, are in the program currently or have taken the program in the past. And as a matter of fact, I like to hear from traders that I've worked with 5, 6, 7 years ago asking, hey, I got a new computer, can you update my my license? So we have a lot of that happening recently. A lot of people have recently updated and upgraded their computers, and it's nice to see all the traders coming back and updating their licenses in order to get the software on their new computers and their new NinjaTrader machine IDs and all that stuff. So what we have here is a way to learn on your own. It includes all the licenses, lifetime licenses as well. And so the accelerated class is learning on your own, and once you're ready, after you've recorded and reviewed all of the material, then you go ahead and schedule live classes, mentorship classes every week. So this is a way that you're not stuck on specific days that you have to attend to. You actually learn on your own, and then it could be a month from now, it could be instantly if you'd like, then you start the live classes. So this is the accelerated mentorship here. You can read all about it, or if you have questions on it, you can go ahead and reach out to us. And we do have a promotion now, especially because Memorial Day and the holiday is coming up. We do have a promotion. Just give us a call or email us and we'll provide you the promotion if you haven't seen it already through your emails. To join, you can save some money. It's a discounted program as well. So looking here at the software, the Atlas line today, and not every day is going to be this good, but today we have a huge down day. And when we have a huge down day, there's a couple of things that we may want to focus on. And along with the member site, the free member site that we're offering everybody, you actually get to learn a method called the ABC method, and I'm happy to cover it here as well. I'll bring it up. And the idea behind a trending day, and trending days have very similar characteristics. So in the beginning of the day here, we have an at the open signal to go short. At the open is one of our primary programs that we started off with. And then we have the Atlas line. And then the market just kept on going and going and going. So at the beginning of the day, it's almost impossible to know we're going to have a trending day. Although there are a few ways that we could look at and we can see based on cycles if we're going to have trending days. And I actually can show you that as well. But the idea is, once we realize that the day is trending, how do we approach this? Will we continue to counter trend? Will we do trailing stops? Will we hold on to a position? So if you look at a day like today, where the market just kept on going, really the determining factor is whether the 12 o'clock here, 12 p.m., if the market breaks lower than the pricing that occurred at 12 o'clock. And if that happens, typically speaking, we can expect the market to go lower, or the market to give us a late day rally or a late day sell-off if it doesn't continue lower. So it's really important to understand how support and resistance works, especially up to the first 2.5 hours. Now, the software, the Atlas line, gives you the main signal, and it gives you these P's and these S's. Let me just expand this out here a little bit so you can see these P's and these S's. And you can turn them on and turn them off, and they're signifying pullback trades and strength trades. Pullback and strength. That's what they signify. Now I have them both checked. I want to see them both. And we also have a bounce signal. I have that unchecked because sometimes we have too many signals, and I don't want to just create a big mess out of the charts with too many signals. So I have that typically off. And some of you here who have the outline, you know that I recommend that that's unchecked, and you actually learn how that works. So the strength in the pullback trades only happen based on price action. If the market continues lower and lower and lower, that's the only reason why we have these pullback and strength trades. So when you think about entering into the market, think about both distance and think about timing. Time and distance along with the price really gives us a good indication of what's about to occur. So as an example, the main signal here short at 40.1950, which is just about here, this is created based on when we have two consecutive candles closing below the Atlas line. As soon as the Atlas line begins to work, we have two consecutive candles closing below the Atlas line. So it's not complicated, it's not a mystery, it's based off of price action, and you should be aware of it. And anytime throughout the day, if we have two consecutive candles closing above the Atlas line, then there'll be a long signal. So you can almost anticipate, whether you're using a 1-minute chart or a 5-minute chart, this is going to be the exact same signal for everybody. There's no optimization involved. Now, if the market continues lower, there should be additional opportunities, right? So if we have a trend, why not continue to sell it and sell it as the market goes lower and lower? The key to these pullback and strength trades is they have to happen and they have to occur with not just a pattern, but also with a lower price. So with the Atlas line, when you look at this here, this pullback pattern here is happening lower than the main signal. And this strength trade pattern over here is happening lower than the previous main signal and also the previous pullback trade. And then we have it continue. Here's additional S's and strength trades, which is indicating a lower entry, and that's what it needs. It needs to know that the health of this trend is continuing to go lower and lower, or else a pattern is just a pattern. A pattern can happen anywhere. A pattern can go and occur as the market is going up or as it's going down. What matters is whether or not the pricing is lower. So if you're going to notice, every pullback trade is lower than the previous. Every strength trade is lower than the previous. And as we continue, every strength trade is lower than the previous. So you can see that there's a reason why these patterns are only part of the equation, but we also need to have the market provide us a lower entry price in order to validate it. Does anyone have any questions on this so far? Paul, Randy, Wendy, Dan, Bob, Julie, Mary? Okay, so price action I think is really important. The first part of learning about price action is not just having an indicator like moving averages or momentum or MACD, which I really do stay away from. Nothing that I teach is based on the conventional indicators. I think it's more important to understand a concept, why we're entering. So whether it be two candles closing above or below the Atlas line, or the trade scalper giving us breakouts, or the blueprint as well giving us breakouts, whether that is occurring is only part of the equation. We then have to look at the second part of the equation. What's the risk? Is there anything stopping us from taking the trade? Is there something I can filter it out with? Is the market continuing lower, or is it in a channel, or is it in a range? So these things a lot of traders forget about because not every day is going to be the same. As an example, if you take a look here at this little blue line here, this is something that I've been recommending a lot of people use in any type of trading, not even even if you're not part of the DayTradeToWin family, but if you're doing your own trading on any market that you're looking at, add this ATR indicator. The ATR means average true range, and this tells me when the market is slow or fast or okay to trade or too volatile or too slow, and it also, more importantly, dictates the stops and the targets. So take, for example, I'll answer your question, Bob, in just a minute, but take, for example, right here, the strength trade over here. So this is a strength trade pattern, and yes, it does, Bob, by the way. So we're entering short on the third candle here. S for strength, and the entry is the third candle is where we're entering, right over here, Bob, to answer your question. And the same thing with the pullback trade. We're entering on the third candle. So the S's are preparing you and the P's are preparing you to take a trade to the short side or to the long side based on where they're occurring. Okay, you're entering on a third candle. So if you take this signal here as an example, what type of target are you going to use? So most traders say, I always want to use the same target and stop. And so that's a problem, because if the market is slow, how are you going to take a large stop or a small stop or a big target? You can't. You have to adjust to the conditions. And that's why I recommend and I use, and I tell everybody to use this ATR, because this tells me at the moment I'm going to place a trade, the current conditions indicate about 3 points. So 3.27, 3.25 point. This is the E-mini S&P, so 3 points. The same for the micro, 3 points, 3.25. This is my expectation. Once I know that, I immediately realize what my target is, what my stop is, how far the distance is going to be that the market could travel. Should I even take the trade? Is the market too slow or too fast? And it's happening real time at the moment based on this candle. So I'm using a setting of 4, and it looks at the last 4 bars to calculate this value, 3 points. So 3 points is 12 ticks. And I want to be sure that the market moves in my favor 12 ticks, or I'm out of the trade. And there's also a time element. I call it a time-based stop. So as part of the rules that we look at with any type of trading that you're doing, whether it be the trade scalp or the Atlas line, the blueprint, you can see that I'm looking at the conditions. I'm looking at whether I should buy or sell. I'm looking at what the target and the stop is. And that's all based on what's happening now, not what happened yesterday, not what happened 3 hours ago, not what happened 2 hours ago, what's happening right now. So this is a good part of your learning experience when it comes to trying to understand what the market is doing, but more importantly, what it can do for you. So if I look here at this, I can say 3 points is my goal. And from here to here, the market went 7. Now I don't know it's going to go 7. I can only anticipate at the time that it's going to go 3. And that's how we would dictate at any point in time, at any moment. That's what we do as traders. That's what I teach. So on a 5-minute chart, Jatinder, it's different because the ATR is much larger. So if I switch this here to a 5-minute chart, right, 5-minute chart, you're still going to have strength trades and pullback trades. You're still going to have the main signal, but every candle is 5 minutes, and it's much more volatile. So a 5-minute chart is currently at the conditions that we're in, 10 points or 7 points or 5 points. This is really volatile for most traders to be in because the stop has to be much larger. So it's the same, right? Whether you use a 5-minute chart or a 1-minute chart, it's still going to give you strength and pullback trades. It's still going to tell you to sell or to buy, but the risk is much larger. And that's why I recommend using a 1-minute chart, because we want to make sure that whatever risk that we're entering into the market with, it's sustainable. So I know right away that the market is going to move, let's say 3 points, or it's going to make, for example, here, it's indicating 4 points or 4.25 points. So I want to make that not overly small where it's too slow, but I need to keep that under 5. If it's under 5 points, I know exactly what the risk is. I don't want to have a loss, which does occur, right? But I don't want to have a loss that's more than I can handle, and that's why I use a 1-minute chart, Jatinder, as opposed to a 5-minute chart. Now, most of the videos that I've done, let's say 8 years ago, 7 years ago, you can find them on DayTradeToWin.com or in YouTube. The videos that I've done in the past when the market was slower were all done under a 5-minute time frame because the market was slower. But now that the market is faster, we have to adapt. And so the volatility forces us to look at a 1-minute chart in order to reduce the risk. All right. Jatinder, any questions? Bob, any questions as well? Let me just post these for everybody here, forward them to you. Okay. So this is today on the Atlas line. Now, I started off saying, well, how do we know if the market's going to be a trending day? So one of the things that I look at is not just the Atlas line to tell me what kind of day it's going to be. It just keeps on going and going. It stays under the Atlas line, so it's all sells the entire day. It's not just it, but we have this, I'll just bring it up here, this way of looking at price action, which divides the day up. Now you can, like I said, you can download this for free. It's the DayTradeToWin ABC here, and there's nothing that you have to do. I like to just change the color here of the middle part of the day. So you can download this for free. It's a trial. You can take a look at it. It'll help you understand the type of day, and I'll go over it here a little bit with you. So what we have here with the software is indicating that we look at the first part of the day, which I call the A part of the day, and then I look at the B part of the day. And then the last part of the day is called the C part of the day. So that's why it's called the ABC method, or the ABC software. And I developed this because most traders don't know whether or not the day is evolving into a trending day or not. Believe it or not, we don't have many days that are trending days. Most days, they don't trend. They actually go sideways or they flop around. But when we do have trending days, we should know it and take advantage of it. When the day is chopping around and flip-flopping, we should also understand that's what's happening and then trade accordingly. So you can't really trade the same way on when the market is looking at a chop or a flip-flop as it is a trending day. So when I look at this here, I look at the first part of the day here. Let me just remove here the Atlas line here for a minute. When I look at the first part of the day, and I'll take off the at the open as well. Here, just remove that. When I look at the first part of the day, I know what happens here. It's usually the strongest, the most volatile. It usually has news, events. So there's a lot of opportunity here in the A part of the day, unless there's too much risk. So the A part of the day tells me there's a lot of action, opportunity, and a lot of traders that I work with want to be finished within the first 2.5 hours. This is 2.5 hours. Now the B part of the day over here is really important, because the B part of the day dictates whether it's going to be a trend or not. So if the trend is occurring, why not take advantage of it? So the way it works is it waits until the price, as we pass the first 2.5 hours, so in my case, being in the Eastern Standard Time Zone, 12 p.m. is noon Eastern Standard for me. It's 2.5 hours after the day session opens. So at this point, once the market breaks the lows of the range of A signal is produced. So again, it's not rocket science. It's not complicated. It's based off price action. You'll see a signal here based on these candles closing. The closing price here of the candles will dictate this price here to go short at 39.63. And so when we have here 1, 2 candles, this pops up. It'll say, hey, listen up. It's time to go short. We're breaking the lows of A. This normally doesn't happen. You have an opportunity. The day will be trending. And this is early enough in the day that we have all of this to be able to capture. Now, if this same situation happened later, so let's say that this is flopping around like this, like this, like this, and then only towards the end of B, it breaks, it's obviously not the same. Okay? So I don't want to take a look at a trending day and believe it's going to be a trending day unless this break happens early on, and sooner, as soon as 12 o'clock. So let's say 12 o'clock, 12:05, 12:10, 12:15. It's just continuing and breaking and breaking. This to me is indicating a strong trending day. So there's a relationship that we have. Again, support, resistance, culminating both these two sections, and then the opportunity to take a trade long or short based off of that. Now there's also a late day rally or a late day sell-off, and that happens here in the last part of the day. I call that the C part of the day. And that really tells me that at the end of the day, there could be news, there could be the FOMC, there could be earnings reports, and we could have a huge rally or a huge sell-off. So again, the signal is produced because 2 consecutive candles are closing below here, the range now is B. So the relationship now becomes these two areas. So 2.5 hours for the A, 2.5 hours for the B part of the day, also known in the past as lunch, but we know that it's not lunchtime for everybody. And then the C part of the day, the last part of the day. So now I can go short, and by the end of the day, I should see at least enough movement to make, again, looking at the ATR, 4 points, 3 points, 3.5 points. So at this point, the market went 10. Now, I don't expect the market to give me 10, 20, 30 points. The first target is always 1 times the ATR. That helps me and tells me that we're on the right track. If it doesn't make the first target, which is 1 times the ATR, within a few bars, and it just starts to go sideways, I'm out of the trade. It's not worth holding on to it. But we want to see it go at least 1 times the target, 1 times the ATR. And this, like I said, the software can be downloaded, and you can check it out at DayTradeToWin.com. And it comes with a course as well. So I actually teach you this method if you want to do it manually as well. So this is for today. Let's take a look at yesterday. And the software also allows you, if you wanted to update the session, some traders are international. So if you wanted to trade the international market, that would be 3 o'clock, the London Open, the start of the Life Exchange in England, 3 o'clock EST time. So please adjust for your time zone, right? So make sure that your time zone is correct so you understand the session start time. Now, if you have questions, you can always email us. We have a great support team. We actually install a lot of software, NinjaTrader, the indicators for a lot of our clients. So even if you're new to trading and you say, I'm not really computer savvy, we do remote support on a daily basis for traders who want this all installed for them. Now, actually, let me go first to yesterday here, and you're going to see something a little bit different. So this is yesterday, and what we have is the A part of the day and the B part of the day. But this is not a long, this is a short. And the reason why this happens is because, like I mentioned earlier, this is very strong resistance and this is very strong support. So what happens when the market bounces off of the highs of A and immediately turns around as if it's just a double top? You've heard of that term probably, double top. And so that's why we see a signal here to go short. 40.69 is based on, and you can see here, the reason behind it. This candle closed above the range of A. The very next candle closed below the range of A. That signifies that we hit resistance and it's now reversing. So when I look at this and the software tells me time to go short, I know we're not having, at least for the moment, a trending day where it just keeps on going and going and going and going. What we have is it hitting resistance, like I said, a double top type of scenario, and now it's reversing. And when I look at this, the opportunity is huge because usually the market does stay contained. It kind of chops around like this. So there's a lot of movement distance that the market could make. So this is 8 points. I think anybody here in the room would be very happy to take 8 points on a simple trade in the middle of the afternoon, or at least here it's almost at 1 o'clock. I would. And so when I look at the opportunity that exists, even 1 or 2 trades a day on a situation like this, it's great. So we have, with the ABC method, 2 opportunities. It's not just looking for trending days if the market breaks out and continues either above or below. We also have a situation, what if it bounces off of resistance or support and then reverses? Fantastic. It's great. Then the market got stuck just sideways. Again, it's not the same idea of a trending day. And you should also know that between the high and the low of this A, it's more common, I would probably say 80% of the time, or even 85% of the time, this B part of the day gets stuck. So everything that you're seeing, the market going up and down, up and down, up and down, it usually is contained within this resistance and support. Anyone have any questions on that? Okay, so the software not only provides trending days, but also tells you when it's counter trend. So let's take a look at one more here, see what the day before that looks like. Okay, so here we have, again, a different situation, not a breakout and continuation, but you can see again what happened. The market hit the resistance and immediately reversed, producing this signal. So this is the relationship between A and B, and then we have the relationship between B and C. So again, the market hit this, immediately the software produced a signal. So I think it's pretty interesting that you can do both, look at a trending day and also counter trend trading. That's what it comes out. Now, can you buy throughout here? Absolutely. Can you, let me see here, sell throughout here? Absolutely. But it's not the same. You would have to use the trade scalper or the blueprint or something along those lines. Now, I also mentioned that you could use this ABC software. Again, you can download it for free. That's correct, Jenny. You can just get a free member account, and it's there for the download. You may have to license it with us, right? So some of you may have to send us your machine IDs to license the software if it doesn't work immediately, and we'll get you up and running. So let's say that you are international and you want to look at the after hours, the London start time. So you just update that to start there, and let's take a look at what happened here. So this is 3 o'clock in the morning, for me at least. It's 3 o'clock in the morning, New York time. What happened? The market began to break out, gave you a signal. So as long as we have enough movement activity, so it has to have some volatility, you have a lot of opportunity. If the market's too slow, usually it's less than a point, which is, I can actually put a line there and say anything less than 1, which is 4 ticks on the micro E-mini or the E-mini or the NASDAQ. Usually it's not worth trading. It's just too slow. It's more chop than anything. All right. Now, if you take a look at the next day, let's take a quick look. Here's a long trade, and here's an example of a long trade and probably went nowhere. So you have a long opportunity with this trade. After hours or overnight failed. There's nothing here that the market did not continue higher. So if it starts to go sideways, it doesn't continually go up, time to get out of the trade. Okay, so this was overnight on the 18th, last night. Okay, to go short, the premise is the same. There's no mystery. There's the short signal, maybe even to recover for anything that happened there. Okay, so this is the ABC method that everyone can download for free. I know some of you have been asking here with the questions on the micro E-mini, so I just pulled up a chart on the micro E-mini. The micro E-mini is exactly the same. And so one of the softwares that I like to use for swing trading, to give you kind of a sense that it's not just day trading that we do at DayTradeToWin, you can also swing trade. We like to use the Blueprint software. And the Blueprint software in the past was only taught manually how this works. Recently I got this coded and it actually works really well, especially if you're new to day trading and want to learn more on the benefits of trading the markets. Visit DayTradeToWin.com, join the next mentorship class starting later this month, and subscribe to the DayTradeToWin YouTube channel. We focus on price action and work exclusively with new and beginner traders who want to learn more on how to prosper from trading.